Okay. Okay. Right, hopefully that screen is working. Fantastic. Okay, so welcome to the Enigma midweek webinar. So what we're going to be doing is just going through the major pairs, seeing how they look. It's a bit of a weird day to start our first webinar because it is, of course, the US bank holiday today. So the markets aren't really moving particularly nicely. But anyway, let's have a look. So we'll start with cable. So let's just... So GBP USD. We're at a really interesting point at the moment with cable. So here's the 4-hour chart. As you can see, I mean, price has just been falling and falling over the last 2 weeks or so, and you know, we've got a couple of patterns in play potentially. The most obvious one being this inverse head and shoulders, but we really do need to see price rally and at least break 125.935 indicated by this level here. I mean, the pound's been really weak, and it's going to take something pretty special for it to rally. My personal feeling on this is that we're going to be going lower and at least testing the bottom of 125.045. So if we go into the hourly, I'll just explain what I'm seeing here. So we've got our 5 waves down, or most of it. We've got a 1, 2, 3, 4. So at the minute we're just consolidating, and we've just come out of this range here seen in the green box, and I would really struggle to see price breaking out of here and coming back into value. So my personal bias is on a continued bearish sentiment. What we really need to see then for that to happen is a break of 125.575, and that would allow price to continue down towards the next significant level, which is indicated by this red line, and that would actually be our sort of double bottom on the 1 hour and 4 hour. If we go back to daily, you can see that let's just take this off here. If we were to come back down to that level, that would be, you know, basically a triple bottom. We've got a big level here where price hit and rebounded, 2 and then 3. So at the moment, we don't like, I mean, we don't really like buying it at the moment. There will be a buying opportunity should we see a really nice bounce off of this level, the 125. So yeah, very interesting. It should be noted as well that, you know, I always look for the news, and I always think about what fundamental data could we be looking at that would give pound a really strong bullish rise. And at the moment, I can't, you know, I'm not seeing anything, especially with the Theresa May leaving, you know, with deciding who would be the next prime minister. There's Brexit talks. There's so much going on at the moment, and you know, if we were to break this level here, you know, we could see the pound really tumble. Let's just don't want to chance fate, but if we were to break the 125, we could be going down really down to the lows of 121, 119. That's a possibility, a pretty scary one. Anyway, so that's cable. Mixed. Let's see what happens in the next couple of sessions. But let's see. Next one. Let's do Euro USD. Okay, so Euro USD is one of the most complicated charts I always find to actually analyze, because we've been in a huge correction for so long now. I always I struggle getting the counts. I mean, look at this huge corrective structure here. What we can say though, the last couple of weeks is we have got this move to the upside that's happened. We've got a break here, big break, new high. So you've broken out of this range. And what I've labeled it as is an ABC WXY, which is a double correction. What we're looking for is, and you can see I've drawn a nice trend line here, which kind of fits the trend line. Really, what would be the best outcome? I'd say hitting this trend line here and a nice bounce upwards. But this structure is completely, this is a corrective structure. This is not impulsive. So this says to me that we're not going to be coming out of this sort of weekly range anytime soon. There is, there's going to be some upside. I see upside on the 4 hour and daily, limited upside, possibly to 115.761. But again, we're in a corrective structure here, so we're not going to be coming out of this with any kind of real bullish sentiment, in my opinion. Let's get down into this then. So we can label this, we could possibly label this a 1, 2, 3, 4, 5, and then that would be the 125.80, and we'd want to see a nice rejection off of this 4 hour trend line. We can still go long on this, and we can still go long after we see the bullish confirmation, but I don't think this is quite ready yet. To go long. We've still got some, I think, some more downside to go. So if we were to label this, so look, it's got 1, 2, 3, 4, 5, and that looks quite nice as the pattern goes. Here, nice strong impulsive move to the downside. Wave 4 is commonly very complicated in terms of its structure, so this is quite common to see something like this. But euro, we're not presently looking at buying or selling it. We need to wait until we see what happens at this trend line here. That would be what we're going to do. We're going to wait on the sidelines on that particular pair. Right, let's move over to USD JPY. Now tomorrow we have it's the NFP, so lots could happen. Really, the dollar is weak at the moment. It is, and we can see that just looking at this hourly chart. This again looks very corrective to me. And when I say this, I'm talking about this structure here. And I think the results of the NFP, pardon me, are going to be weak. And I think that's just going to continue this bearish sentiment. So what we have here is quite interesting. Now, I did label this in the start of the week report as a 1, 2, 3, 4, 5. I have it here in green, but it just looks to me very corrective. We came into Monday with a gapping, price made a gap, and Tuesday the gap's been closed. But we can see this is a 1, 2, 3. It looks, again, corrective. It's not an impulsive structure in my opinion. This if we were potentially to label it as a 1, 2, 3, 4, 5, it would be 2, 3, 4, 5. The problem I have with this particular count, this wave 4, it doesn't look very nice to the eye, and when we're looking at elite wave analysis, the wave 4 really does need to be in it needs to be in perspective. It needs to be it can't be too big, basically, and here it just looks too big for me to label it as that. I mean, I have labeled it in green potentially just for the alternative count. So again, it's a little bit like euro, really. We've got another corrective structure. It's a difficult one at the moment. We're not trading it. We're wanting to see what happens after tomorrow's NFP. But we do have a channel developing if we were to be on the bullish side. And let's go to the 4 hour. You can see that we've broken this channel. We've retested the channel itself, so that's a good sign. But the move, it just looks to me a little bit undecided, and there is definitely the chance of some more downside. Now, if the NFP comes out, we get some good news and we get some dollar strength, we can see that we could move nice. We would want to see a nice strong impulsive move, possibly up testing 110.635. We do have a gap that I've shown in pink that will potentially be covered at some point, but it's a tough one. It is a tough one. Let's just go to the daily. So I think if we were to break 106.73, which is here, we would definitely, we're going to be revisiting the lows of made by in January at the start of the year. There's nothing really around support wise to be stopping a free fall down there. I mean, a break of this level and the dollar's really going to slide heavily. So let's just wait and see what happens tomorrow. But we're not trading this at the moment. We're just going to wait and see what the outlook is on the NFP. So, but it's going to be an interesting one. Now, next one will be gold. Gold is obviously indexed to the dollar, so if we've got a really weak greenback, we're going to get strength in the dollar. There's a lot of sort of with the stock market overheating, people are getting a bit fidgety, institutions and investors, and they're looking to shore up their investments in the physical precious metals. And that's why we've seen such a huge bullish run on gold. Let's just have a look. The last probably month or so, meteoric rise. We broke out of this channel here. And you can just see that gold was kind of meandering, really, especially here. And then it was a massive incline. I was looking at gold yesterday, trying to come up with a count. Now, where I see it, it looks to me, it looks like an ABC, A, B, C. And an ABC pattern is essentially corrective, which there are two sides to gold. On the one hand, I'm seeing gold retracing heavily on the daily chart, actually, in the coming weeks. But fundamentally, that's not really what's happening fundamentally. The technicals can say one thing, and out in the real world we can have completely different, different sort of oppositional news, as it were. So we've got an ABC potentially, and the rules really are of an ABC that we have our A leg, we get another retracement of a B, and then another leg, which is a C leg. And the rule is the A and the C legs are of the same length before we would get a retracement, so we call that equal legs. Now, if we get our fibs, let's just have a quick look, and we can kind of measure where, if this was an ABC, where we would expect to see a C leg finish. We can get our fib extension from the bottom to the top. So we can just see where price is, and that would be up at 14.53. So that would mean that the C leg is now the equal to the A legs. So there could be a bit more upsides to gold. Anyway, let's go look at the 4-hour chart just to get a better idea of what's going on. Okay, I've had to play around with this afternoon because it's a bit complicated. So as we can see, first of all, gold moving up this channel on the 3-hour, but it doesn't matter, 3-4 hour chart, moving up this channel. We have this nice We topped out at wave 5 last week on 1438, and then we saw a nice ABC, a 3-wave move back down. So we can call this wave 1 potentially, and then this would be our wave 2. Now, the problem I have with this at the moment is we can see we had a double top, which says to me that we're doing a flat correction. And a flat correction, we're going to have an A, B, C. So we're going to revisit 1383. We would essentially break this trend line before moving higher. So let's just nip down into the hour. So price, again, with the US market being, it's closed, there's nothing really happening. It's hard to actually pinpoint what is going on here. The difficulty I have, if we were to say this is a wave 2, we're finished now, moving a wave 3, I can't see a clear 5-wave move. This to me, it doesn't look very nice as a wave 4. It just looks too big, it looks too choppy. So I am erring on the side that we're going to see more downside, at the very least to 1400. At the very least, we'd come off the trend line, we'd bounce up. But in the background, yes, we could be revisiting 1397. So again, we can definitely be starting to think about issuing longs once we see either a rejection off of the trend line here, or again from support at 1381. So I mean, long-term gold, very, very bullish, at least up here, up to 1500 or so. So definitely one to watch. Okie dokie. And I think that's all we've done. Pound, we've done euro, yen. Let's have a look at US oil. Okay, US oil. Now, we had an OPEC agreement that came out on Monday, which I thought would actually give us some support with oil, but oil yesterday, it completely just fell out of the level, and it just continued to drop. So we've labeled this as, let's go here. So you've had a 1, 2, 3, 4, 5. We've retraced up to wave 2, and according to this count, we could be seeing significant downside all the way down to $38. Now, it's very difficult because the technicals are saying that we're going to be seeing $38 a barrel, and this is where fundamentals come in, because we'd really have to see the trade war between the US and China heat up. There'd have to be some kind of real monumental sort of development out in the world, I think, really to see this kind of level. But that's what the technicals are saying at the moment. A break, let's go back into this. So this is a nice important level here. If we were to go past 55.97, then we can expect another slide. The next significant level is going to be 55.9. So if you were thinking about issuing shorts, then that would be your level to do it at here. You can see the price has respected this. We've come off twice, rejected. This could be, there are a couple of things. It could be a 1, 2, 3, 4, 5. 1, 2. So we've got a 5-wave move. Oh, let's take that off. Let's just bring these down. Let's just check. Yep, so we've got divergence there. That looks okay to me. So you've got a 1, 2, 3, 4, 5. And then we could be seeing more upside here. So this would be the end of this wave 2 here. Let's just change that just to make it a bit clearer for you guys. And then what we can do, we can get the fib level. Fib levels are very important, especially when you're talking about Elliott waves. So this is our second. Okay, so you know our other outcome. This could be our second alternative. I mean, we have hit the 0.382, which is quite a significant level, really, especially when we're talking about Elliott waves of wave 2. Usually, we would see a retracement around about there if the impulsive wave is strong. So, if we're in a very trending market, the retracement is always going to be very shallow, around about to 0.382. And in here we have got that. That's a potential. Now, in order to qualify this as that, we will need to see a break of 64.4. We break that, then we know we're going to be going it higher. At least we can calculate how high we're going to be going. We can do that with our fib extension. So at the very least, if we break this, we can be thinking about we'll be going back up to the 65.40. So there's this significant upside there if this level is broken. Okay, so again, there's always two alternatives of Elliott waves. At the moment, because we've seen so much downside yesterday, I am really on the side of the bearish side, and you know, I wouldn't be surprised if we broke this level here, 55.84. Okay, so those are the major pairs. Those are the kind of things I'm looking at the moment as we go in, as we kind of move to the end of the week. We will be aiming next week for this webinar to be live. There's going to be time at the end that I'm going to give people to ask questions. Maybe they've got some different pairs that you're looking at, so I'm quite happy to go over and look at those pairs as well, and talk more about the strategies that I use to place my trades. So this one is recorded. If you do have any questions though, or you've got some feedback, we'd love to hear your comments. And if you like what you see, please subscribe. This will be posted on YouTube as well as our main website. So thanks again, and I look forward to seeing you next week for our live webinar, which will be on, I believe it is Tuesdays 12 till 12:45 and Thursdays 12 to 12:45, and that's in the PM. Okay, thanks guys, and I will see you next week. Thank you.